Thank you so much for joining us. Happy Tuesday to you. It feels like a Monday. It's a Monday Tuesday, I call it. And we're going to be getting our trade underway at the bottom of the hour. There was no trade, of course, yesterday due to it being Labor Day. Hope you had a good holiday weekend. I'm Marlin Bohling, your tour guide to the ag commodities. And before we kick things off today, I want to introduce you to some USDA news that just came out and a special guest. We had USDA just a moment ago coming out with a news release saying that we had an overnight sale, or a weekend sale in this case, to talk about. But it's not what you would normally suspect. It was hard red winter wheat, 327,300 tons of it, to Nigeria. So no mention of soybeans, no mention of corn, no mention of China or Mexico. It was hard red winter wheat to Nigeria. So that's an interesting start to the week. And I want to welcome aboard Chris Swift of Swift Trading in Nashville. How's your weekend?
Very nice indeed.
Good to have you with us.
It's good to be here.
You surprised me when you said you could come in person, and that's a treat. So,
well, I tell you, not much was happening this morning. So after the weekend, long weekend, and everything was kind of calm and quiet.
So seriously, do you expect it to be a quiet week?
I kind of do. The WASDE report comes out on Friday, and we're all anxious to see what kind of changes that USDA make, and especially because we're hearing some rumors of an acreage change. It's a very unlikely thing at this time of the year to see that. And some people are thinking, well, they planted more acres, and I kind of look at where they're going to get those more acres that over what they had already anticipated.
So when it comes to USDA, have we ever had anything like this before?
Not that I can recall. We always can come in with yield changes on it and carry out, but an acreage change is a very rare instance at this time of the year.
And the weird thing is, we don't know if they're going to raise the numbers or actually lower the numbers, because it's possible they could actually reduce the numbers, correct?
It is, specifically just because what we know historically from the March planting intentions to the actual July planted acres, that 1.5 million acres, a large portion of that went into North Dakota, South Dakota, and Minnesota, where they had the worst drought. And so we know that those states are deficient in their corn production right now. And so if there is more acres, then more likely than not, it was planted for some kind of insurance purposes, more so than it was to actually field a crop.
That's interesting too. Yeah, all kinds of stuff at work here. Okay, and even when the report comes out, if that's the case, then a lot of people won't even believe it, will they?
We're still going to be unknown, because we don't know if those acres, if they are additional or not, if they're going to really produce a corn crop, or where they were just put out. And if it is lower, that would be pretty significant, because it has been a drought year, and there has been some weather issues in very small areas. But I guess when they look at planted acres out there, that's what they're searching for, is those acres that actually didn't get planted.
It's going to be the year of the perpetual mystery here when it comes to the crop. All right, let's take a look at what the trade did overnight, and we'll go ahead and take a look at our corn market first. Our quotes provided by bar chart showed corn was pretty flat. December down 1/2 cent at 523.5 per bushel. Moving on to soybeans overnight, well, we had November 6.5 cents higher at 1298.5 per bushel. It kind of firmed up as we got toward the morning a little bit. On the wheat market in Chicago, we had the December contract unchanged at 726.5. And by the way, we did have some deliveries posted. They did include the wheat. I believe that was the biggest delivery that was posted this morning. I don't have the number right in front of me right now, but it wasn't all that much. Now looking at the Kansas City market here, as far as the wheat, we had 4 3/4 higher on December at 727 3/4. And in Minneapolis wheat overnight, we had December just 1 tick higher at 912 3/4. By the way, in the cotton market, what did it do? Well, we had December new crop cotton up 18 points at 94.17. We'll come back and talk more with Chris Swift. We'll focus on our livestock trade when we come back. Well, we're back talking with Chris Swift of Swift Trading Incorporated. He's based in Nashville. I should just say Chris Swift of Swift Trading. Sorry about that. Let's talk about the livestock setup for this week. We had some big volatility last week. What do you see happening here this week?
I think more volatility, really, because we did see a large price decline last week. We've seen some increasing open interest, which was kind of interesting in that most people thought that the market should be going up with that increase, and it's been steadily going down ever since. And we get more news over the weekend about a mad cow that was found in Brazil, and that is an atypical, which means that it was a natural occurrence occurring event. It was not due to a feed substance, the best we know. But China has now halted all their beef imports from Brazil. And so this morning, everybody will be hashing around seeing where those beef exports go to now from Brazil. Does the U.S. take some of it? Does the U.S. halt any kind of imports from Brazil? There's be some unanswered questions this morning that, as the morning goes on, will be answered and help us to decide which way the market wants to go.
So I heard this morning they now have 2 cases.
Yes.
In Brazil.
Yes. Yeah.
Okay, so it has to make people a little bit nervous.
I think so.
What does your gut tell you? Will the U.S. market benefit from that? Or not?
It's tough to say. If we do have trade negotiations with Brazil that we would accept some of their beef. So I don't know if the U.S. would not allow any of that due to this situation, or whether they would Brazil would use this as an opportunity to dump that meat somewhere else. If you look at it from the Chinese perspective, they're probably going to want that beef replaced somewhere, and the U.S. may be the benefactor of that.
What about the pork side? How would that come into play?
I'm not real sure that it would have much to do with it at all. So we've seen the pork prices kind of slip a little bit here in the U.S. We get evidence that China's pork production has been increased significantly ever since that they have had the ASF. So I think that they have plenty of hog production going on right now, and I don't see it hampering it that much.
Well, let's look at the prices, how we wrapped up, and this is all the way last Friday, and we had the December live cattle down $1.27 Friday at 130.92. When we headed home for the weekend, we had the October feeders down 257. That was a lot of pressure there at 162.47. They did not have a good week technically. Lean hogs went home, let's see, we had October down 27, December down 22 on Friday at 82.10. The deferred's ever so slightly higher. What do you see for an opening call today?
Probably just a little bit softer. I don't think anything really big that I've seen. I think the index will probably slip further this week. And I know that the feeder cattle index, we saw some sales a little bit later on in the week that are a little bit lower. So I believe you'll see a little softer feeder cattle index this week as well.
Well, thanks for helping us kick off a
Always
short
a
trading
pleasure.
week.
Yeah,
It will be a short week, only 4 days long for the trade. Chris Swift of Swift Trading, he's based in Nashville. Janet, back to you.